Anyway, on a more optimistic note, we've got some fairly, hopefully positive earnings announcements due out next week. We've got full year numbers from Babcock, who we talked about in a previous podcast as potentially being a big beneficiary of the pivot towards defence. And they got their full year numbers on the 25th. Their shares are now well above £10. When we talked about them, I think in April, March, they were around about 750, a 30% increase in the price of Babcock's share price since then. Again, geopolitics has shifted the narrative to stronger defence capabilities, supports the RAF through its Hades programme.
We all know that defence spending is going to increase significant. Well, it is increasing significantly. It will continue to increase. Although I would just say on that, actually, there was an interesting headline today. Apparently, Spain are looking to get in the way of and potentially block this 5% of GDP defence spending target that NATO are trying to achieve. I think the actual line I saw was something along the lines of, we shouldn't increase our spending, but everyone else should. Not sure that one's going to fly, guys, given the way that Trump is operating. But yeah, fundamentally, the direction of travel remains towards increased investment in defence, and that should benefit Babcock and, frankly, the vast majority of other firms in that sector. And if it doesn't, you've really got to ask questions about what the company in question will be doing.
It does beg the question, though, how all of this was going to be paid for.
It does. But that's not a problem that Babcock needs to worry about. That's one for our
Yeah.
esteemed ex Bank of England economist.